summer, record high gas prices at play in these numbers, 8.6% year over year inflation. That is, again, the highest since 1981.
It was up 8.3% in April, 8.6% for the month of May.
A new cycle high usurping March, which was 8.5. That was the highest since 1981.
So we know that the global economy is splitting regionally. There's a bunch of, let's go back. The US dollar, the US economy is 25% of the world economy. It's, as we said, a huge amount of the world debt. It's 100% of GDP in debt. The real problem is 80% of all trade transactions on Earth are in dollars. So the US is 25% of the economy, but dictates 87% of everything else that happens. When the dollar goes up, the dollar goes down, everybody pays the price.
Bitcoin's roller coaster ride continues as Bitcoin falls below $30,000 after U.S. headline consumer price inflation, which has reached its highest level since 1981. The climb in prices is seen as a sign that the Federal Reserve may be more likely to raise interest rates. I mean, we just got CPI 8.6, a new cycle high since March, when it was already 8.5%. In today's video, I'm going to share Raoul Pal's point of view regarding the inflation and this ongoing unsteady economy. So stay tuned, and if you're new to my channel, be sure to subscribe.
The price of goods moves either because there's not enough supply, which is what we've had a problem with, or it's because there's too much or not enough demand. So if you've got something with restricted supply, so let's think of oil right now. Because of the Russian situation, there is not enough oil for the current demand out there. So the oil price keeps going up. So you and I pay more to drive our cars or to heat or cool our houses. So the only way of solving that one, because you can't get the Russian oil back into the market, is to make us use less oil. So that the price does that automatically because it gets more expensive, we do it. But if you can also then just lower general demand for things, we'll drive our cars less, we'll catch less flights, all of that stuff, and that lowers demand and therefore prices. Because prices rising, inflation, is evil for our savings because the dollar in your bank account is worth less in a year's time. It's currently worth 8% less, which is quite a lot. And so it's this weird situation where we have to take the pain. We're told we can't buy as much and we're forced into it by rising our mortgage costs and our food costs and all of this stuff. And eventually things will slow down, people will be put out of jobs a bit, that kind of stuff. And then the overall demand in the economy comes down and prices come down. So we're all collectively taking the pain for this inflation that was created out of a whole bunch of different things, from the pandemic through to supply chain issues, through to underinvestment in commodities, through to the shift to green energy. All of these things have created this moment in time, which is tricky. And, if we relate it to, for example, the crypto market. So why did crypto stop going up? Well, it was macroeconomic factors, and people are like, well, what's that got to do with crypto? Well, really simple is it's a retail-based market. And about sometime last year, prices started to rise. And so people could afford to dollar cost average less. So then there's less demand for crypto and the price of crypto falls. It's as simple as that.
According to Raoul, crypto is a retail-based company, and it has stopped going up due to macro factors. He also explained how the price of goods moves and how rising inflation is evil for our savings, because the dollar in your bank account will be worth less in a year. If we save now, we'll actually be able to buy less later. So what can we do? One solution is to invest our money in assets that are likely to increase in value as a result of inflation. Another solution is to put your money into the long term. Raoul Pal also talks about the single most important financial topic of a generation, the baby boomer crisis, and how it affects the market. Let's hear him out. But before that, be sure to like and share. Always appreciated.
If two of us go for a job interview, we have a 50-50 chance. If 1,000 of you do, you have a 1 in 1,000 chance. So what happens is, if too many people come into the workforce at the same time, they compete with each other for wages. And if you look back and inflation adjust wages for the average median American or the average American, particularly the median American, over the last 45 years, it's not gone up at all. So there's been no productivity growth. The miracle never happened. But in the meantime, the price of assets went up. Why? Because there's a whole bunch of people at the same age who all want to buy a house at the same time, all want to buy into the stock market at the same time to save for their retirement. They pushed up prices. So they got poorer because they didn't own it all. And so the more they tried to buy over time, the more it went up. And they got this massive gap. And that gap between their earnings and the costs of assets that you secure your future income in kept going up. So they borrowed money. And when you basically adjust by asset prices like house prices versus wages, the difference is the debt. And then the government started doing the same. So it was all driven by the baby boomers, but the baby boomers had a second shock and a third shock. Second shock came really in the mid-80s, which was computers. Computers started competing for jobs with people. Slowly at first, and then faster. And then 1996, 1999, 2000, well, 1996, the World Trade Organization, WTO, agreed that what a great idea. Let's all trade without tariffs with each other. Free markets. Yeah, well, the free market actually meant that when China entered the global workforce, they would work for a fraction of what you and I would work for. And so that meant labor costs never went up. And the cost of goods got cheaper because China could produce them cheaply. So we just gorged on this stuff because there's cheap goods. We borrowed more money because we had this future expectation of ourselves being rich, the American dream, and we gorged on more money. And we borrowed money to see if we can make money from asset prices. So this whole thing was driven by demographics, and that came out of World War II. So it was World War II that drove all of the mess we're in now, and that's the same globally. The US has the millennials, and that's helped the US economy outperform Europe over time. Japan didn't have millennials either. So they're all older populations. The US had the millennial population. So the millennial population, it pops up into the workforce. You know, the millennials, about 4 years ago started hitting 30 years old, that big thing. This is a big bunch of people. Problem is they look into the world, their parents are still in the workforce. So they need to compete with jobs with their parents. There's a whole bunch of them competing with each other. They all try and go to university to see if they can get a better job. So they drive up the cost of university. But then come out of university, they try and buy a house. They drive up the cost of house. I mean, it's just a mess. When you have these bulges of population, you create all these distortions. So these millennial population are pretty screwed because their parents have driven up the price of assets so high, trying to save enough to retire, which has never really happened. But they come out and say, right, I'm earning money now. What do I buy? Oh, the equity market at all-time high valuations, the bond market at all-time low yields, property prices are too high to afford. I'm fucked. Again, all of these are why I got to crypto. Because I knew that I had a different expected future return because their parents hadn't owned this stuff. And therefore, they themselves could help drive the price up and the adoption as long as they bought it and owned it.
Millennials, on one hand, have helped the U.S. economy, but Raoul explained how it also has affected the market and is one of the main reasons behind the increase in asset prices. He asks the hard questions. Can you afford to retire? How will the coming crisis impact your life? Moreover, will the largest generation in history cripple the economy? In addition, Raoul also offers a glimpse of a brighter future, in which smart millennials take control over their financial destiny and sidestep the crisis. And his favorite is crypto space. He believes the future of investment lies in the crypto space. To conclude today's video, a rate hike could potentially throw a wrench in an already unsteady economy, but making it more expensive for people and businesses to borrow money. And if the Fed increases the interest rate, how much more is essential? 25 basis point, 50 basis points? Everyone is in fear and may have already started dumping. So, which camp are you in? A holder or a dumper? Let me know in the comments below. Also subscribe to my channel for more videos like this. I'll see you in my next video.